Hi, we're here in Boston at SuperReturn US 2016, and we're talking with Marc Lau from Axiom Asia, and I'm going to ask you a few questions about Asia, if that's okay.
Sure.
Private equity in Asia, that is
Absolutely.
your specialty, and so I'm fascinated to hear what's going on over there. Emerging markets in general have sort of taken a tumble in the past few years, and many Western investors in particular are a little bit leery about whether or not this remains a good private equity opportunity. What are you seeing on the ground?
That's a great question. And actually with all this volatility, one of the things that we have to really keep mind of or be mindful of is that volatility is actually not the dominant driver of returns for private equity. Growth is. And so, this conference actually occurs at a very opportune time. About a year ago today, the Chinese stock market started its precipitous nosedive. In that time, our managers in Asia have returned over $300 million in distributions back to our investors. Why is that? Because they invested in companies that grew, and because they grew, when they sold them, they were worth more. So when we look at the public markets and volatility in general, we look at the public markets as an amplifier of returns. If the public markets are great, we'll get an extra turn on the top. If the public markets are bad, we'll still make money, we just won't make as much money. So at the end of the day, what makes me really excited to do my job is that if you look at the fastest growing companies in the world today, many of them call Asia their home. And it's driven by very long-term megatrends, such as the rising middle class, the use of technology to open up unmet market needs, or in general, just the growing prosperity of consumers in Asia.
Talk about your deal flow, or at least the deal flow that you're seeing across the markets. Has the slowdown or the shutdown in the IPO market meant that private equity capital is more sought after?
I think that's going to be very true. Private equity competes with other forms of capital for returns, right? And so you can go to a bank, you can go to the stock market to list a fund, you can go to the corporate debt markets, or you can come to private equity. And as all these doors start to shut down, either because the IPO window is closed, or because banks are full up on lending to state-owned enterprises, and so they don't have much allocation for private enterprises, you find that more and more people have to turn to private equity in order to fund their growth.
Let's talk about investors, limited partners. What are you seeing by way of allocation to Asia? Asia had a pretty good run, leading up to the most recent crisis. Are they allocating to Asia and setting aside percentages? Are they being more opportunistic? And how do they define Asia? What are some trends that you're seeing on the investor side?
Actually, our experience is that most investors in private equity in Asia actually have pretty low allocations. The norms typically for emerging markets as a whole in a PE portfolio is typically in the single-digit to low double-digit range out of the PE portfolio. And Asia is just a part of that. So, we actually find that, in our experience over the last 10 years, the private equity market and the addressable market for PE has grown much more rapidly than the economy. And the reason for that is acceptance of PE. Today, 10 years from when we started, entrepreneurs, managers, all have read about private equity. They might have sons or daughters who have studied in business schools across the world, come back and know about private equity. And the political environment for private equity is actually a lot more forthcoming. I mean, just look at Korea. 10 years ago, Lone Star got into a lot of trouble and a lot of mess because of their purchase of Korea Exchange Bank.
They made too much money.
Fast forward to today, Korea is home to some of the largest private equity investors in the world, and some of the largest private equity funds in Asia actually call Korea their base. So we think that private equity has a long path to go in Asia, and in terms of allocations, certainly given the growth prospects of the economies and growth prospects of the companies in particular, which is what we're most interested in at the end of the day, that there's room for those allocations to go up. And if you take an extreme example, like Temasek Holdings, which is a sovereign wealth fund with a private equity bent, 70% of their portfolio is actually Asia. And over the last 42 years since inception, they've actually earned a compound annual return of about 17%. Now, I'm not suggesting in any way, shape, or form anyone put 70% of the PE portfolio in Asia. But if you believe that there are continued growth trends for companies in Asia, then it certainly warrants a higher allocation than it is today.
Final question for you. Talk about China in particular. What do investors need to understand about what's going on in the private equity market in China right now that is interesting or possibly even cause for concern?
Okay. You know, it's actually not about politics or the economy. The single most important driver of returns in private equity is manager selection, right? And what does manager selection mean? It means you have to find a manager who's motivated and hungry to find the best deals out there. What a lot of investors don't appreciate is that private equity investing in emerging markets and Asia as well is extremely physically harsh and challenging. It's not like you get in your car, brave 30 minutes of traffic on the 101 to go visit an entrepreneur. If you've ever been to China or India, first you have to brave the crush of humanity at the airport. Then you get in a dirty cab, which crawls at 6 kilometers an hour to some science park somewhere, and eat on a roadside stall with an entrepreneur to convince him to take your cash. And I can assure you that roadside stall has hygiene that's nowhere close to Chipotle Grill. So,
are you charging the fee to the fund or to the firm at the roadside stall?
Well, that should be picked up by the GP.
Of course, yes.
But you know, I think at the end of the day, you need to have a manager that's willing to go that extra mile. And that manager has to be willing to go down to the level of the entrepreneur, live the life that he's living in order to convince the entrepreneur that he's going to be a good long-term partner. If your manager is not doing that, if he's not hungry or motivated enough, then that manager is going to be investing in the leftover deals. And in the leftover deals, the returns will definitely be worse.
Well, thank you, Marc. Thanks for telling us about what's going on in Asia.
Happy to do so. Thanks so much.